It is official. Retail investors became the smart money and institutional investors became the late to the party money. However, it wasn't always like this. This is a new phenomenon. Not too long ago, retail investors wanted to stick it to Wall Street by buying stocks of failing companies like GameStop and AMC. They looked for a savior. They analyzed pictures of cats looking for clues. Is our savior communicating a hidden message? If the cat looks like it's about to sneeze, then maybe the short squeeze is right around the corner. This was the dumb money. Even a movie was made about this. But then came Palantir, then RobinHood, and then hims and hers. This time, retail investors finally beat Wall Street, but the right way. Instead of buying stocks of sinking Titanics, waiting for a squeeze, they beat Wall Street and made even the most successful managers look like toddlers. Finally, retail investors learned how to beat Wall Street by finding companies with disruptive technologies, interesting business models, revolutionary solutions before Wall Street professionals. I don't know about you, but it appears that this way it's much more productive than staring at a picture of a cat for hours and counting the number of hairs on its head, don't you think? In today's age, retail investors have many advantages over professionals. Institutional investors have all sorts of rules before investing in particular stocks. The companies have to be of certain sizes, they have to trade on certain exchanges, they have to have revenues and profits, then they have to be approved by this committee or that committee. Palantir is a perfect example of how retail got it right early and institutionals mostly got involved late in 2024. Retail investors first got the taste of Palantir in September 2020 through a direct listing. You see, Palantir did not go IPO the traditional way. Instead, Palantir did a direct listing, allowing retail investors to participate at the same time and at the same price as institutional investors. However, while both retail and institutional investors got the same opportunity to invest, it is retail investors that took it upon themselves to learn about the company. They did proper due diligence, while the institutional investors waited for the numbers to show up in the financial statements. Retail understood that Palantir already had an existing governmental contract. Retail understood that there was a problem that needed to be fixed with Palantir software. They understood that most companies were inundated with data, but that data alone didn't really tell them anything about how to create value. Palantir's products took this data in different formats and locations and served it back to the clients in a way that the clients were able to create value for themselves. Because retail investors were willing to roll up their sleeves and study Palantir while institutional investors kept sucking on their thumbs, retail investors were able to make 2,000% return. Hims and Hers Health is another retail-driven story. Just like Palantir, Hims stock went up 2,000% while the institutions were sleeping. I have to admit, I didn't catch Palantir in the early days, but I did catch Hims and Hers. On March 7, 2022, I made a video about Hims stock. The company's telehealth platform is disrupting the healthcare industry. Also, the personalized medications is something that was desperately needed. Again, retail investors did the work, they discovered the gem, did the proper due diligence, and beat Wall Street in the process. After making serious money on Palantir and Hims, the newly named smart money is searching for the next win. Oscar Health is the next stock that is becoming very popular. While the stock is already up 10x, the upside is still huge. As you probably know, the health insurance situation in the United States is a complete disaster. I always say the best thing that you can do is to never get sick and never need to go to the doctor. This way, you don't ever need health insurance. Right now, doctors pretty much charge whatever they want for their services, and the patients don't even care because the insurance is paying the bill. Consequently, insurance premiums continue to go up. As a result, families have to pay $30,000 per year for health insurance. Our government is practically bankrupt, while the healthcare industry is erecting world-class medical buildings. Well, Oscar Health is disrupting individual health insurance market by providing individualized health insurance targeted for specific needs. As a result, revenues are absolutely exploding, and recently the company even reached profitability. If you want to learn more about Oscar Health, I made this video about the company. Nebius Group is another stock that retail investors are liking a lot. It is an AI infrastructure stock. In other words, Nebius is building data centers with NVIDIA chips to rent out the computing power to AI companies. As you know, AI requires a lot of computing power. And while the Amazons, the Metas, and Googles of the world can afford to build their own data centers, other companies can greatly benefit from renting computer power. I also made a video about Nebius Group. However, I don't like it as much as Palantir, HIMSS, and Oscar Health. NVIDIA chips will become obsolete, and data center business is very capital intensive. With that being said, the stock price is more than doubled since I made this video, so what do I know? Next, AST SpaceMobile is going nuts. The stock is up 20x in about a year. As you know, when you use your cell phone, there are dead zones, specifically when you're outside of the populated cities.
Can you hear me now?
Well, AST SpaceMobile has satellites in orbit to provide space 5G cellular broadband. No more dead zones. Connectivity directly to our cell phones without any extra devices. Big problem and big solution. The Verizons and AT&Ts of the world are lined up to provide this service to billions of users through AST SpaceMobile satellites. As you can see, retail is discovering winner after winner after winner. This is a long way from the apes, GameStop and AMC type of investing/gambling. This is a different level of investing. They are doing serious due diligence, and Wall Street cannot keep up. And you know what retail investors are discovering as we speak? Aduro Clean Technologies. Seriously, go to X, go to StockTwits, look at the number of people that are talking about ADUR or Aduro Clean Technologies. Look at all these tweets where ADUR is mentioned along with the companies that I featured in this video. And this is non-stop. Also, the trading volumes for Aduro are exploding. Aduro uplisted its stock to NASDAQ in November 2024. Before that, the company was trading on Canadian Securities Exchange. Before NASDAQ, the trading volume was maybe $100,000 per day. Now it is between $2 and $10 million per day. Because Aduro only has a market cap of about $300 million and addresses a $1 trillion problem, these stocks could potentially be 10x by Christmas and 100x in 5 years. Also, last week, the options chain opened for Aduro. And finally, we did a survey of how much stock is available to purchase. Only about 10 million shares are available for purchase. This is nothing. The stock is already soaring, as you can see, but this is nothing considering that the company is just getting discovered. So what do they do? Well, Aduro has the best plastic recycling technology in the world. And if you know anything about plastic, you know that less than 10% of plastic can be recycled. The world is producing 400 million tons of plastic per year, and no technology can recycle most of it. Aduro's technology can profitably recycle the 80% of plastic that nobody else can. This is literally a monopoly in the making, and retail investors are discovering it very fast. I suggest you watch this video to learn about Aduro Clean Technologies. I personally own 1% of all of the shares. With that being said, thank you for watching and see you next time.